and start with our results service. The company's name is Accentuate. Before we get into the results, just in case you're unfamiliar with the company, let me tell you what it does. It serves the construction and infrastructure sectors of the South African and African economies, supplies products to public and private sectors, and it's mainly in the floor covering market. In the studio now from Accentuate, the CEO, and that's Fred Platt. Fred, welcome to Open Exchange this morning. Your results look like this. You say it's a solid performance from the continuing operations. Earnings per share up 16.6% to 8.38 cents per share. Revenue maintained at 284 million, so that's flat. Attributable profit up 18%. I remember seeing your interims back in December, and it seems to me there's been a tale of two halves for you this year.
Yeah, very much so, Lindsay. I think that, as you know, at December we were very bullish around the area of government spend, specifically in infrastructure, and went into the new year with quite a lot of projects lined up. Unfortunately, being in the dominant position that we are, Floorworks owns about 70% of the resilient flooring market. And that means that we really take on the shape of the market, and the second half has unfortunately been one where a number of these projects were delayed and or moved into the next period.
Yeah, I mean, you say in your commentary, I'm just reading exactly your comments. Macroeconomic conditions remain challenging, you say, within the domestic market, and more specifically in the construction and related supply sectors of the economy. But you don't assign blame anywhere. Is the public sector or the private sector to blame?
Well, I think if you look at where we're positioned, we play in both. Effectively, the private sector space that we've played in historically has been relatively flat. Government spending, has its ups and downs, and the area of health and education is really the major players for us. As far as private sector is concerned, that trend has continued throughout the period under review, whereas government spending, the first half of the year was well up, and the second half was relatively flat.
So you haven't managed to grow the top line. You say your revenue is flat, your earnings per share up 16.6%. What have you done? Have you improved your margins? Have you cut your costs? How have you done it?
Well, I think a number of factors have contributed. Obviously, when the market, when the revenue is not there, we have a responsibility to look at costs, and we did that. Our cash costs were only up about 3%. Total costs were pretty flat. And then obviously we look at maintaining our margins and ensuring that we have growth on the bottom line.
Having a look at the divisions now, obviously flooring is the main one, and so we should focus on that. Can you tell us operationally how you did?
Yeah, the flooring business over the period was up about 3% year on year, and we have expanded our offering within the Floorworks in order to hedge also against just government spend and the areas that we are in. So we've done an acquisition specifically in that area, which is Suntup's the solid wooden flooring business, and we're really looking at expanding our market presence into both Africa as such, following the projects into Africa, and then also the commercial market back home, which we see a lot of opportunity still in. Generally, with the reduced revenue and demand, obviously with the factory in East London, that has an impact not only in terms of the revenue line, but also on the throughput through the factory and the recoveries that we have.
You've said that because of your dominating position in this particular space, you are vulnerable to the macroeconomic economy, and you've just alluded to Africa. How active is your Africa expansion and its plans?
Well, historically, we've pretty much viewed Africa as a commodity market, so we've taken our commodity products into Africa. We have changed our focus in terms of Africa with a focus on projects. And we are working very closely with a number of South African firms that that see the opportunity in Africa. We've also changed our focus in many of the countries, and we are also actively targeting the Francophone countries in Africa.
Looking to the future, those projects that you alluded to right at the beginning of the interview, Fred, that have been either pushed out or postponed or whatever it was, are you confident that they might come back?
Yeah, the very nature of the flooring business is that, the pipeline of capital projects that we're aware of and are working on may get delayed during a particular period. If we look at government spending, and if we understand the infrastructure needs of this country, we understand at some point in time that is going to come through in the areas of education, in the areas of healthcare, and in the areas of transportation. That is the area in which we play. So although we do see we are takers of the temporary cycles within that greater cycle, we're still confident that government spend will come through. However, in the meantime, we have broadened our offering into other markets to try and hedge against those particular periods that government do not spend.